Good morning, guys. Welcome to this Thursday, September 4th. And we are looking at the market, which is holding on to their gains. So yesterday was a big concern was if they're going to be able to hold on to this gain, this move to the upside. And if we're going to get a little bit of a pullback going into the close, and they held on pretty good. Actually, we had a little rally. You see, they were down here towards that 62.30 in M period yesterday. It looked to me like we were in for some weakness, and then look at that little rally, right back up, turn the whole thing around, right back up to the high of the day, and we've been holding on to that since the whole overnight. So just goes to show in the last half hour of the day, things can change. We were down here at support at 64.30, we're right back or 62.25, and we're right back up here to the highs. So pretty interesting move to at the end of the day yesterday. However, we are right back up to this attractor area at the 64.70s. Question is really where we go from here. So we have a couple of big pieces of news coming out. Um, well, it's a big one, yes, tomorrow, but today we have a lot of them. So we had a job cut report come out at 7:30. 85,000 from prior was 62. Not a huge jump, but it's a jump nonetheless. We get the ADP report come out at 8:15. We have international trade, jobless claims, productivity, and cost coming out at 8:30. 9:45, we get PMI composite. 10 o'clock, we get ISM services. And then we have a nat gas report at 11 and an oil report at 12. So we have good news all morning. Different markets, but I think most of the action is going to happen at 8:30, 9:45, and 10. And then we have to watch the energies after that. So that's kind of what we got on tapped. And of course, tomorrow we have the employment situation come out. Employment situation. I'm not going to be here tomorrow, so I'm not going to open the room. I'm going to be out chasing Marlin. It's going to be probably the last tournament I do for that this year. But so I'm going to be out tomorrow. I'm going to have internet, be able to respond to emails and so on and so forth, but not being able to pick up the office phone, obviously. So anyway, I'll be seeing you guys back on Monday after today's trading session is over. Right. So uh, so news this morning, employment situation Friday. Am I going to be not going to be opening the room on Friday? Just to remember that. Now, starting off the trading day, I would start off range bound. I would probably start off with a slight bias to the upside given the overnight and see how and how that um, the fact that they've been holding on to these gains and really taking it a little bit higher in the overnight. We'll see if they can hold on to that one, but just basically the Monday started off with a big move to the downside, and then pretty much we've been holding on to the gains ever since, or we've been retracing this whole things ever since. So this is hang on, this is Wednesday, Tuesday. So Tuesday's session was Tuesday's session, which was like this big drawdown. Because Monday was Labor Day, so this Tuesday was the first trading day. They really ran it lower, and then basically back up again. So it's a short trading week, and with a little scared to get the week started, and now we are right back up to where we were. So I would start off with a slight bias to the upside, looking to buy weakness just against the 64.55s and the 45s, these two support areas. If they trade below it, I'm taking off any long bias and going back range bound, maybe starting to think about the short side again. So we can certainly stay here, and we have a pretty good trajectory at the 6400 to 6410. We have the 6470 to 80s. That's kind of where we are right now. And I would just, and we can go back and forth between these two. I mean, we can build value here for a while. Right now, the most of the volume is up here at the 6470s. And that's where they're trading right now. I wouldn't be too crazy or too concerned if they run it down here to that lower attractor 6400. But that would be as flat out range bound trading at that point. Right now, I'm thinking with the fact that they ran it lower on Tuesday and then retraced the whole thing, we may have a shot at a little bit of strength going into end of the week here. Big caveat, we have a lot of news coming out today. We have the employment situation Friday, and the employment situation is going to be watched carefully. So that could be a big deal how that whole thing shakes out. All right, so initially looking to buy again 64.55s, 64.45s for rotations back up. If they start heading lower, below that 45, so I would look for a rotation down here to that 64.15 or 10 to 15 attractor. Um, Still potentially looking to buy against the 35s, 25s, down here to the 15s, but just not as aggressively. I would probably be try to be patient and wait for that 64.15 to get hit if we get that far down. So that's kind of the way I would approach it. On the way up, if they start taking us higher, I would look for short setups against the 64.70s, 80s, and 90s. Above 90s, I would stay on the long side, assuming that we're going to be heading higher here. So 64, 70, 80, and 90s, looking for short setups for rotations back down to this attractor at the 64, 70s. So that's the ES to get started this morning. I think that's going to be a fairly good start. Then we'll see how the day shapes up. It's September. There could be some seasonal volatility just because that's what everyone expects. So they kind of created themselves by kind of moving stuff around and protecting themselves and selling and buying. Doing whatever they need to do to protect themselves. So they kind of create some of that volatility just by doing that. Now, looking at the Nasdaq and the bond market is trading higher. So we are right up here at the 115. Nice pop here at the 8 o'clock hour. They started the bond market. So they popped out there up to 115, and we are solidly right back up in this upper range again on the bonds, where they let's see if I found my capital flow here. So we were down here towards the lower end of this range on the bond market, and they're right back up to the upper end of the range. We're still trading right at value, back and forth in a pretty tight range. So I would start off with a slight bias to the upside on the bond market, look to buy weakness, and looking to buy against this support area. Hang on a sec, guys. Sorry about that. So I would start off on the long side, looking to buy weakness against the 26s, against the 20s for rotations back up. And pretty much if they trade below that one, I'll probably take off the long bias. And if they trade below the 14, 15s, we're pretty much back to value again. So this little mode here we got here at the 1408s. So we're right here up against the upper 15s, maybe taking this, maybe moving this to the upper areas. But looking to buy weakness just to get started against the 1426s and the 20s for rotations back up again. And as I say, if they trade below that London low at the 15, 14, 50s, I'm taking off. Well, I'm back, pretty much back range bound at that point. So we're starting off with a slight bias to the upside. Let's see how far they can take it. Short opportunities against resistance at 1508s, 1514, 1522s for rotations back down. Potentially, which one's going to hold, who knows. We have a small long volume area here at the 115. So if they take that out, we can probably take this a little bit higher. So I'm thinking. So that's the bonds, starting with a slight bias to the upside. Looking to on the Nasdaq, looking to buy weakness, same as the ES. Nasdaq is not quite as strong, looks like, but they are pretty much back in this attractor area. They've been probing down here to that lower area at the 23,000 is pretty good. So far, that's been holding that revert retest, and then we're right back up here against the 23,500s. And looking at the I mean, they have it's a pretty good blob of volume here we had to get past, but they had to kind of clear that 650, 700 area and then the 800s, this whole range for us to really get back on the long side of this. And we are pretty much right back up here. So I'm modestly optimistic, like we can make it go out of it. We'll see. But so far, that move down here on September 2nd, a few days back, has been reversed, and we are right back here at value. So starting off with a slight bias to the upside, looking to buy against that 23,500s, 450s, down to the 420s for rotations back up. Below the 420s, taking off the long bias, going back range bound, and then we'll see how far they can take it after that. So if they start taking out that 420s, you see that's going to be that mean here on this on the F1. Did they take out this ledge at the 370s? That would be one level below that. I think that's when things can potentially open up to the downside. So watch that. So one level outside the obvious would be the 370s, and we've seen that happen a few times on the Nasdaq when they run at three level, they buy the obvious areas down to the 420s. And then one level below the obvious 370, that would be that big five-letter ledge right there. But looking to buy against those support areas for rotations back up. Below that, below the 420s, I'm taking off the long bias, at least at that time. And at below 370s, then we start thinking about maybe they're going to try to take it lower from there. On the way up, looking for short against the against resistance 540s, 570s, 620s, up to the 650s. If they can get up above 650s, and as I showed you here, above that 650 area, they're going to get out of value into this upper tail, and that would be a probably good sign that we have a shot at taking it up and testing the 800s, maybe taking it higher. We'll see. But I mean, this is the whole area of congestion we're looking at. And I would look for short setups all the way until they take up that 650 area. Basically thinking that they're going to stay in the range. And that's kind of the default setup right now. And starting with a slight bias to the upside, looking for early strength to see if they can test these upper areas. But if they can't really make a big move out of it, then we're pretty much going to be right back range bound again. Right, so looking for shorts against the 540s, 570s, 615s, 650s for rotations back down. And on the way down, they're going to buy against the 450s, 420s. Last one would be the 370s. That would be one level outside the obvious. And I'm going to adjust this area just a tad. Get this guy up a little bit there. Did I do that? There you go. All right, so that's the Nasdaq. Finally, oil and gold. You see, let's start with oil, backing off a little bit. So that back here, the 64 was the attractor area. They're kind of backing off a little bit further than that right now, heading lower. And we just have to see how far they can take it. Anyone's guess. Oil is so volatile, so many cross currents going on to really make a good call out of that one. But right now, I think the bigger concern is what happens in the Russia situation, and if then there are going to be sanctions coming on Russia there. That could be an issue. Spiking oil prices depends on how they react, how everything kind of plays out, and how they if China has to go out or India has to go out and buy oil on the market instead of just buying Russian oil. But it all depends on how these players react, what happens to oil prices. But at this point, I mean, all the energy production kicking off in the US, that's going to start nullifying all those reactions pretty quick. But at this point, we're still looking for I would still be expecting a reaction if they had to put sanctions on Putin to get him to change his ways. So we'll see. Right now, it looks like they're not going to go the path of an easy peace deal. But that's my biggest concern when it comes to oil prices, and not my concern, but I think that is the biggest concern out there in terms of what's going to impact oil prices. But we'll see. At this point, I would start off on the short side looking to sell strength, 63.30, 63.70, 64 for rotations back down. If they're up by 64, take off the short bias, go back range bound. And I would be looking to buy all the way down to that 61.70s. So against the 62.80s, 62.50s, 62.20s, 61.80s for rotations back up, I would just be buying as you get closer to that lower edge. So pretty much a range-bound market, but I would start with a slight bias to the downside on oil. So, right, so we got the ADP came out plus 54, expecting it's a little bit weaker than expected. And I don't see a huge reaction, a small reaction, but not a huge one. Finally, gold. So gold, super volatile. You see how crazy that got in the overnight, right? They were up here, made new highs yesterday, all 36.40s. They went all the way down here to the 35.70s in the overnight, but before they started retracing and right back up again. So volatility is the name of the game there. I'm not touching this one right now unless I see a really good setup. So I'm just too volatile. So, but you can see here, capital flows tells you the story, right? So we are right up here. You can see we have been spiking higher, straight up. So we can retrace this all the way down to the 34.15 area or 34, say 34.50 is a decent breakout area, but they have so 34.50 to 36.50 almost at 200 points to the upside, and that's a pretty good repricing. So probably repricing based on concerns about the Russia situation, I would think. That would make more sense now when you saw this little parade they had in Beijing. So we'll see how that whole thing shakes out. But at this point, volatile gold, I would trade it from the long side. I would favor the long side, trade it from the long side of the market. We're in a move out of the middle to the upside. So far, we have still not had a day when they're just holding below. So we're still extending, still in stage one, and I would trade it as such. So I would look to buy weakness. Maybe we got all the weakness in the overnight. So we'll see how much weakness we can get. But I would look to buy against the 3600s, 3590s, 3585s. 3580s for rotations back up. I think below 3580s, we are definitely on our way down. I would almost start that or try to hop on the short side here below 3590. I think if it goes below that one, I think we have a decent shot at retesting these lows. And that would be more technical trading. I don't think that's necessarily any change in direction. I think the bias is to the upside. But once you extend this far, it's like a rubber band. You're going to get a snapback effect of some sort. And then you can see them take it a bit further than you expect before they find support. So it's just shaking out weak long positions is what that is. So people getting on short long positions late in the game, it's going to be under pressure if they pull back a little bit. So anyway, so trade gold from the long side of the market. I'm going to be staying away from that, I think. Just depends if I can see a decent setup or not. But you get in on the right side on the gold trade like that, you'll be happy. I promise you. If you can stick with it. Anyway, so that's oil and gold. So gold from the long side, oil with a slight bias to the downside. Looking at back to the ES. And here we are. Pretty much twisting it. So not much reaction on the index on the ADP report. A little bit of a pullback on the Nasdaq. A little bit of pullback here too, but not a big reaction. All right, so all right, we'll leave it there for now. So and remember, tomorrow I'm not going to be open the room tomorrow. I'm not going to be in. So just to remember that. So all right, guys, I'll see you back at 11:30 for the next update. So good trading.